Good morning, students. Good morning to all of you. Vignesh, Karthik, good morning, good morning. So students, will start now with the TDS and TCS particular part quickly. And students, we will look into some questions which are also there. I'll select certain questions. We will, like from the RTP and all the other particular aspect. And on that basis, we will try to deal with the same. Arundhati, Ashwar, good morning to all of you students. Let's start, students. I'll first start, students, with the TCS part. Indrakshi. Students, I'll first start with the TCS part in this context. So let's start with the TCS particular segment, students. Now, students, TCS, as you all are aware, in this context, the rates are being given to you. Money. The rates are being given to you, students. I'll start with TCS and thereafter TDS and some selected questions also we are going to do it, primarily looking into the relevance in this case. One case law, students, is also expected, students, which we have discussed in the RTP. I'll just quickly run through the same. And those are the things that we will look into it in this particular session today. We'll quickly finish it off, the TCS and the TDS part first. So far as TCS is concerned, students, just keep this in mind. This section of the TCS, as you may be aware, the first TCS, students, which is a section, this comes under section 206C1. Ramkumar. 206C1. That is the TCS particular section. Now, in this particular case, students, the scrap is important. Just focus on the 1% part. The scrap, which is 1%. Thereafter, students, you have the alcoholic liquor for human consumption. That is sufficient enough. The tendu leaves and timbers and all, you can just remember like this. 206C1F, 206C1, and then thereafter there is the motor vehicle. Three things are only there: motor vehicle, and thereafter the remittances under the LRS scheme, and finally the seller who has received the consideration in excess of rupees 50 lakhs in the current previous year. In that case, the TCS of 1.1% has to be collected. Bhanu. So these are the 4 or 5 sections. Students, just remember the TCS in this particular way. 1% is the 206C1, which we are discussing right now. So 206C1, that scrap and alcoholic liquor for human consumption, that is the most important particular part as well. Now in this case, students, can you see in this case mineral being coal? On the coal part, there is one important particular question which could be expected in the examination, and it is also covered in your RTP. So coal 1% is there. That is the context. Okay, coal is also 1%. So I told you, students, just remember 1% for 206C1. So 206C1, primarily just remember 1%. After that, 1% is also applicable for this 206C1F, which is in respect of sale of motor vehicle if the sale consideration exceeds rupees 10 lakhs. Now, please understand, this particular sale of motor vehicle, students, has to be from whom to whom? From the manufacturer to dealer, or from the dealer to the buyer? This particular sale of motor vehicle has to happen from whom to whom? It has to happen from the dealer to the buyer, not from the manufacturer to the dealer. That is also covered in the recent RTP in November 23 examination, wherein from manufacturer to dealer, if the sale has happened of the motor vehicle, then TCS under section 206C1F will not be applicable. TCS under section 206C1F will not be applicable. Now, students, this is also targeted in November 23 attempt. RTP, Chetan? Yes, Chetan. This is also targeted in November 23 attempt. RTP, students. And what is that? TCS Students, before I proceed further, can you just tell me what is the status quo? What is the thing which is pending? All of you, just quickly, a minute or so. Quickly let me know which is the area which is pending from your side. All of you. Satish, Kuldeep. Arundhati. The capital gains in PGBP is true. Okay. On the capital gains particular part, students, I'll tell you a smart way of looking into it, and therefore that's precisely how you will deal with it. Okay. A smart particular way, students, I'll just let you know that is precisely how you have to deal with it, because capital gains, technically speaking, we don't get an independent question. So just the areas which I'm marking for all of you, just try to revise in that particular manner. Don't try to revise in a normal manner, because that way it doesn't come in the examination. So let's start with this one, students, quickly. Perfect. So therefore, let's start, students, on this particular part quickly. So 206C1, and then thereafter, students, you have 1% is the rate that you should always keep in mind in this particular case. And also, if you see over here, the minerals being coal or lignite or iron ore, for that minerals also, students, we have got 1%. Motor vehicle, students, 1% also we have discussed. From dealer to the buyer is what has to be considered, not from the manufacturer to this one. Now, students, in this particular context, this is what is important, students, this time. And what exactly it is? On the coal, the TCS on the sale of the coal, students, what it would be? TCS is not applicable if the buyer is a resident and furnishes a declaration in writing that such goods are used for further manufacture, producing or processing articles or things of a power generation, and not used for the further trading. So as far as the coal in that question, please recall number 23 RTP in this context. So the buyer was a resident, and that coal that they have procured, or the coal that they have purchased, that for the purpose of some energy generation. Obviously, you buy the coal for energy generation in your factories, and if that is the purpose for which the coal has been purchased, that is the purpose for which the power generation or for manufacture, producing or processing, for that purpose if the coal has been purchased, then there will not be any TCS. Now you tell me one thing, students, in this case. So TCS will not be applicable. Be careful, students, over here. TCS will not be applicable. Please understand one thing. TCS is not applicable under section 206C1 because of the fact that I purchased the goods for the purpose of processing, manufacture, or the power generation. TCS will not be applicable. Okay, now if TCS is not applicable under 206C1, the next question therefore is, students, to all of you, can the seller collect the TCS then under section 206C1H? 206C1H, can the seller collect the TCS under section 206C1H? You are aware of what is that section in this context? Can that be collected, students? That seller is having the turnover in the last year of more than 10 crores. The seller is having the turnover in the last year of more than rupees 10 crores. Okay, so therefore, on the basis of that, fine, that particular seller has sold a coal. The seller has sold the coal, and last year turnover was more than 10 crores, and the buyer who is purchasing the coal, that buyer is purchasing for the purpose of his power generation, for example. So obviously the TCS cannot be collected in 206C1 because of that exemption. So therefore the question to all of you is that if the TCS cannot be collected under section 206C1, can then the TCS can be collected under section 206C1H? To that the answer is no. Why? Because 206C1 is a specific provision, whereas 206C1H is a general provision, okay, wherein on the basis of the turnover of the seller in the last year and the consideration received from the buyer in excess of 50 lakhs, on that basis the TCS is getting collected. It is not specific to any goods. So that is the reason why the TCS specific section are those which are covered in section 206C 1 and 1F. And if you get disqualified from section 206C1 or 1F, in that case you cannot move to the general section of 206C1H. But TCS cannot be collected. But the buyer who is paying a consideration of more than rupees 50 lakhs, but the buyer who is paying the consideration of more than rupees 50 lakhs for say coal, and the coal has been purchased by the buyer for power generation, and this particular buyer is having last year turnover of more than 10 crores. So whether the buyer who is making the payment of more than rupees 50 lakhs to the seller, and this buyer is having a turnover of more than rupees 10 crores in the last year, can this buyer will be under the obligation to deduct TDS? Answer is yes. So TCS will not be applicable. That is fine, but TCS and TDS are two different concepts. So therefore TCS will not apply, but TDS provision of section 194Q will definitely be applicable in this case. Just keep this particular point in mind. It has been targeted in the November 23 RTP also, and definitely can be expected question so far as your examinations are concerned. Is that point clear to all of you? Now, so far as a motor vehicle is concerned, students, the sale consideration, the car value should be more than 10 lakhs. And this particular consideration amount of more than 10 lakhs could be, the car value should be more than 10 lakhs. Now, it is not a necessity that it should be paid in cash or check. It can be paid in any mode. Doesn't matter. The TCS that will be collected at the rate of 1% would be on the entire amount. By the way, be careful. Say 11 lakh students in this case. 11 lakhs. TCS and TDS are two different concepts. If TCS is not collectible, that does not mean that TDS you cannot stop, because TCS obligation is on the seller, TDS obligation is on the buyer. So therefore, a TDS obligation goes under the buyer, and therefore the buyer would be under the obligation to deduct the TDS. Had the TDS obligation would have been on the seller, which is never the case, then the conflict would have again arise. But here there is no conflict. The obligation of TDS is on whom? On the buyer, and that is the reason why the TDS definitely will be deducted in this case. So if 11 lakhs is the value of the car, students, question to all of you is whether the TCS on this 11 lakh value of car, whether the TCS will it be collectible on 1 lakh or the entire 11 lakhs? Whether the TCS will that be collectible on 1 lakh or entire 11 lakh, students? At 1%, the car, the value of the car is entire 11 lakh, students. This excess amount on that, the collection of TCS is limited to only some sections. Entire 11 lakh, students. The excess amount concept is applicable to few sections, and those few sections is what, students, you have to do it together. Which are those sections, students? As you all are aware. So the few sections that we are talking about it over here in this case are the section which will now come into play. That is the provision of section 206C 1G, 206C 1H, 206C 1H, excess on excess TCS and TDS. I'll write like this, students. On excess TCS and TDS. Which are those sections? TCS 2 sections. TDS onto 2 sections, students. What are the 2 sections of TDS? 194Q. And one more section is there. Can anyone tell me what is that section? 194N, students. 194N. So therefore, on the excess amount, the TCS and TDS obligation will arise. On the excess amount, the TDS and TCS obligation will arise on these sections. Just keep that in mind. Huh? Now, coming on this particular part, students, quickly in this context. So I hope that all of you have noted on this one. Now, just very quickly, students, we'll wrap it up this particular part. 206C 1H. Now, students, there are two rate 206C 1G. Please have a look. 206C 1G, students. Two rates are there. The TCS under section 206C 1G has got two rates. LRS scheme. LRS scheme, students. Which are those two rates in this case? If you see over here, these are the two rates in this context. These are the two rates, students, in this particular context. 5% in excess of 7 lakhs and 0.5%. This LRS, we are talking about the LRS. So 5%, this 206C 1G. Students, can you just write LRS over here? Because there is a tour operator. Students, there is a tour operator provision. Please write 206C 1G only for the LRS scheme, not for the tour operators. Overseas tour program. For that overseas tour program, this concept will not be applicable. So only that 206C 1G I have written for LRS. Only in that the excess will be applicable. For LRS I have written. Okay, only in that the excess will be applicable. Now, students, 0.5%. 0.5% students would be applicable in which particular case? Now, can you see this one, students? Now, this 0.5%. By the way, students, to get this concessional rate, be careful over here. This is important. To get this concessional rate, students, the PAN needs to be furnished. The PAN, students, will have to be furnished. If the PAN is not furnished by the buyer, if the PAN, students, will not be furnished by the buyer in that particular case, students, what will be the rate? That 5% will become 10%. That 5% will become 10% and that 0.5 will become 5%. Be careful. Huh? That 0.5 will become 5%. You just need to remember these few sections, and that's the reason why it is important that you just, students, give a heading no PAN in somewhere where you're writing on the page. No PAN. So no PAN in 206C 1G, 5% will become 10% and 0.5% will become 5%. Okay. Students, can you tell me this 194O? 194O, the e-commerce operator. 194O, students, the e-commerce operator. What is the rate of TDS in that particular case? Quickly, students, I'm just quickly revising with you this PAN particular part. E-commerce operator. Rate of TDS under 194O. Which e-commerce operator at the time of making the payment to the e-commerce participant, at the time of making the payment, they will have to deduct the consideration. 1%, students, all of you are aware of it or not? Satish, yes. 1%, students, all of you are aware of it. If there is no PAN, then in this case, if there is no PAN, then what happens? If there is no PAN, then what happens? In this case, what is the rate? Abhi, etc. So if there is no PAN, students, in that particular case, you all are aware, it is 5%. All of you are aware of this or not? Yes, Ashwara. So therefore, in that case, 5% is the rate. Just keep these things in mind, students. These are important. There is 194Q also, students, which is there. What is the rate of TCS? Sorry, TDS 194Q. Ajo. 194Q. Quickly, students. These are the important particular areas. Rest of it are not relevant. Only these areas are relevant for PAN and no PAN. 194Q. What is the applicable rate? 0.1%, students. 194Q and this 206C1H is very important to compare. Huh? 194Q is point number of this thing. If there is no PAN, then students, then in that situation, what happens? If there is no PAN, then in that case, a severe provision of 5% would be applicable for 194Q. And now the magical is, now yes, well. And the magical provision is this 206C 1H, that seller having last year turnover of more than rupees 10 crores. Seller having more than 10 crores, isn't it? So therefore on the consideration amount in excess of 50 lakhs collected, TCS is this. But if there is no PAN, then? If there is no PAN, then students? If there is a no PAN, then in that case it becomes how much? It becomes 1%. Can you see that? That exactly is the point, students. This is where the difference arises. All of you just be very careful of this one, students. Now, students, in the examination, be very careful. In the examination, students, be very careful. Chances are very high that in this case, students, in this particular case, I'll discuss that thing a bit later. Let me first wrap it up this and then I'll come back to this one. Now, students, just keep this particular point in mind. Now, let's proceed further. So, all the PAN and no PAN is done. Don't make the mistake, students, in the examination on this particular part. Now, coming on this LRS. So, in this situation, 0.5% students is applicable. 0.5% students is applicable. Applicable for what? 0.5% is applicable in the case when I have taken the loan from ATE financial institution, and the purpose of the loan, students, is education. There are two things to be considered. One, the loan has to be taken from ATE financial institution, and the purpose of the loan has to be for any educational purpose. Any educational purpose. If this is what is satisfied, students, in this case, then 0.5% is what has to be considered. Fair enough. So this is what has to be considered. So 0.5% in the basis of loan taken from whom? From ATE financial institution, and the purpose of loan is that of education. So this is what it will be considered. Now, in this situation, students, and if you say, sir, if the purpose is something else, and the loan has been taken from someone else other than ATE financial institution, in that particular case, 5% of the TCS rate will be applicable. 5% TCS rate will be applicable. So for 0.5, these two conditions should be there in this. Now just take this example, students, of LRS over here. One more example of LRS. Mr. A has approached two authorized dealers. Authorized dealer SBI and HDFC. There are two different authorized dealers. From one he has taken 6 lakhs of LRS remittance, another 6 lakhs of LRS remittance. So TCS will not be applicable at all, although the combined amount of LRS is 12 lakhs, but from each authorized dealer, students, you have not gone more than 7 lakhs. You have not gone more than 7 lakhs. Is that point clear to all of you? Every one of you? And that exactly is the point, students. So this is how it has to be considered over here in this context. Now LRS scheme, therefore, to conclude, students, LRS scheme exemption of 7 lakhs, which we are discussing right now, is dealer wise. So authorized dealer, if there is more than one authorized dealer, so for each authorized dealer, 7 lakhs exemption will apply. And also the LRS scheme is category wise. Category wise means, supposingly I am giving the LRS for education from SBI. SBI is ATE financial institution, and the purpose of LRS is for education of my children abroad. And from the same SBI, I am remitting say another 10 lakhs for the purpose of my parents who are also abroad. So SBI is only one authorized dealer, but the categories are two. Which are those two categories? Here, one is for education, second is for any other reason. So therefore, for each category also, 7 lakhs separate limit has to be applied, even though the authorized dealer is the same, that is SBI in my example, who is ATE financial institution in that example. So dealer wise 7 lakhs will apply separately, and category wise 7 lakhs will apply separately. I hope that all of you are clear with this one now. Every one of you. All of you are clear with this one, students? Every one of you, and that exactly is the point. So just keep this particular point in mind, students, and that is what it is. Now what about, students, in the case of the foreign tour? Students, what about the case of the foreign tour? Tour package. Now students, tour package, just take in this particular way. Tour package, students, In this case, the rate is 5%. Tour package. If you want to write for tour package also the PAN, you can write it, students. Tour package is 5% primarily, and students, TC, if there is no PAN, then it will be 10%. If there is no PAN, then there will be 10% rate. I hope that all of you are clear with this one. Now, tour package are two types. Huh? Be careful. Tour packages, students, here it will be like two. Point number one is when the say a particular person is approaching an authorized dealer, say for the purpose of remittances abroad. So I gave you an example. What was the example, students? Thomas Cook is approaching say HDFC or say Citibank for getting some remittances outside India for various vendors who are there. The vendors who are for tour packages. So for the vendors, they want to do some remittances, say hotels, to the guide, etc., etc. So Thomas Cook approaching Citibank so as to get what? Get the payment for their tour package outside India. For that, 5% is a TCS that will be collected, and there is no exemption of 7 lakhs to be made applicable. That is point number one. Secondly, Thomas Cook students also would be selling their tour packages to various persons in India. 7 days, 6 nights to Malaysia. So therefore, those packages which are being sold by Thomas Cook to various persons in India, for that also 5% rate is there without any exemption limit. And that exactly what you just keep in mind. So Thomas Cook approaching say Citibank for payment to various vendors outside India, 5%, no exemption limit. Thomas Cook selling the overseas, this should be overseas, by the way, overseas tour package program, not 6 days, 5 nights to Shimla. Like that, it will not happen. It has to be overseas tour package program, and only then this thing will be there. But this will not have any exemption, and that is one thing that you should keep in mind. TCS is over, students. I'll now move to the next particular part of TDS. Okay, students, tell me one thing. Be careful. Huh? One question, students. One question was there. One question in the examination, students. The scrap was being sold. Please pay attention. The scrap was being sold. Sold to whom? The scrap was being sold to a foreign buyer. The scrap was being sold to whom? To a foreign buyer. Now, if a scrap is sold to a foreign buyer, students, then the TCS that you are going to collect would be 1.04%. Please load the HEC. Don't forget this point. If the scrap, who is the buyer in this case? The buyer, not only scrap, any TCS provision or the TDS provision. If the other person happens to be a non-resident, then in that case, whatever is the TCS or the TDS rate, on that you need to do the further loading of 4%. You need to do what? The further loading of 4%, students. Is that point clear to all of you? That further loading of 4%, students, becomes mandatory. I hope that all of you are clear with this one. So this is what the TCS provision is all about. One more point, students, by the way, is this, that I think many of you are aware. I think the scrap, if supposedly, students, the scrap is used for further manufacturing for some product, like ship breaking is a common example, or the question which ICI has targeted in the past in the examination. So the ship breaking material is sold as a scrap, but the buyer who is purchasing it, they don't purchase it in the form of a scrap, but they are used for further processing or further manufacturing, or to be used as their plant. So if the scrap has been used, has to be used as for further processing, further manufacturing, or as an asset in their particular premises, then again on that particular asset or that particular item cannot be considered as a scrap, and because it cannot be considered as a scrap, therefore no TCS on that. Priya Blue Lines case law, many of you are aware of it. So just keep that in mind. Whether it is a scrap or coal, the same question that they will target it, You just have to see whether they are being used for further processing, manufacturing, or for generation of power. In those particular cases, the TCS will not be applicable. Can we now proceed, students, further? Fine. So this is what the TCS provision would be all about. And now with that, that is it. Now, just let me check from one question of the November 23 RTP that had been targeted. We have already considered this, but let me just quickly check this one out. The November 23 RTP question, which all of you are aware of it. There are some TDS and TCS questions are there. There are very likely questions which are there specifically for the case laws on TDS and TCS. So I'll just run through them so that at least we are protecting our interest in the same. So students, if you see the question which has been given to you over here, this we have already discussed, students, if you can recall that. So examine the applicability of the provision relating to deduction or collection of tax at source in the following cases in the financial year ended 31st March 23 as per the provision of the Income Tax Act 1961. Delta Limited, an Indian company which was incorporated on 1st of April 2022, purchases coal from P Limited, another Indian company, for rupees 75 lakhs. For rupees 75 lakhs during the previous year 22-23. So this is the first year, by the way. 22-23 is the first year because it was incorporated on 1st of April 2022. So it has sold for rupees 75 lakhs during the previous year 22-23 to manufacture the steel. Delta Limited furnishes a declaration that such coal is used to manufacture steel and not for trading. So declaration has been given. That is, it is going to be used. So whether 206C1 will it be applicable? Answer is no. 206C1 is not going to be applicable. What are the TCS and TDS implication on such transaction if Delta Limited turnover was 12 crores in the previous year 22-23 and Phi Limited annual turnover ranges from 16 crores and 18 crores respectively? So students, Delta Limited is a buyer and Phi Limited is a seller. Delta Limited is a buyer and Phi Limited is a seller. Now Delta Limited is a buyer which they have told to you in this particular context. Now they have purchased, students, they have purchased this particular part for rupees 75 lakhs. For rupees 75 lakhs. Now that has purchased for the purpose of what, students? What is the purpose of purchasing? Purchasing is for further manufacturing. So can we therefore say no TCS under section 206C1? No TCS under section 206C1. And what about point number 2? As far as the second point is concerned over here, whether the TCS under section 206C1H, will that be applicable? I told you already. In TCS, if you are disqualified from a specific provision, then you cannot go to the normal provision of 206C1H. That is the general provision. You cannot take the recourse of 206C1H. But can you go to 194Q? Yes, you can go, because that's a different obligation under 194Q, which is on the payer. Who is the payer? The buyer. Now the buyer, who is Delta Limited, students, you can see in the question, last year their turnover was how much? 0. Why 0? Because it was incorporated in the current year also, current year only. Current year turnover is 12 crore, but 12 crore current year turnover has got no relevance to create the obligation on the buyer under section 194Q, because we have to see the last year turnover. We have to see what? The last year turnover, and therefore no TDS under 194Q also. Now see here, would your answer change if Delta Limited was incorporated on 1st of April 2021 with a turnover of 10 crores? We want in excess of 10 crores. The turnover should have been in excess of 10 crores. So if it is equal to 10 crore, again there will not be any obligation of TDS under 194Q. So no TCS, no TDS in this question. Now if you see the value of the car, Sigma Limited, a car manufacturer, sold the following cars to the car dealer Epsilon Limited and Omega Limited in the previous year 22-23. Now Epsilon Limited, 10 cars of the value of 12 lakhs each. 12 lakhs each, students. Now on this 12 lakhs each, students, please tell me whether this particular TCS under section 206C 1F will that be collected, and the answer is yes. In this situation, sorry, it will not be collected. Why it will not be collected? It is car manufacturer. That's the reason why we have highlighted manufacturer to dealer. So manufacturer to dealer, students, 206C 1F is not applicable. Manufacturer to dealer 206C 1F is not applicable. Okay, can we go to 206C 1H? Yes, because TCS of 206C 1F is not applicable at first place for a sale between manufacturer to dealer. Therefore it will go to the other category. I hope that all of you are clear with this one. Now the other category, students, of 206C 1H will be applicable. 120 lakhs is the amount. So you have to take in excess of 50 lakhs. In excess of 50 lakhs, 70 lakhs, 0.1%. Omega, students, if you see over here, 80 lakhs, again the same thing. In excess of this, that is 30 lakhs, 0.1%, 206C 1H applicable. Now see this diagram, students, which I have drawn while we were discussing this in the November 23 MTP class. Please see this diagram that we have discussed. From manufacturer to dealer, 206C 1F not applicable, but whether 206C 1H applicable? Yes. From the dealer to customer, 206C 1F, is it applicable? And the answer is yes. Fine, so students, with that we will be dealing with it. This question number 18 will be very important, students. This case law, remember we discussed this particular part. This would be very important. I'll discuss it a bit later, students. Let me now come back to the TCS, the TDS provision. Now in the TDS provision, now students, in this context, I think I already have given you the chart, students, which has been there for the TDS provision. Students, first and the foremost, I am doing a reverse order situation, which you should always keep in mind in this case. Now students, this particular part in this context, this compliance part question, is very important for all of you. I'll just quickly remember, students, this compliance part question of the 224E. Just keep this particular point in mind. This could also be one of the questions which is very popular for the ICI. Quarterly statement, students, TDS and TCS quarterly statement has to be filed. So this is a question that we all are aware of it. So Mr. Madhusudan is regular in deducting the tax at source and depositing the same in respect of quarter ended 31st December 2022. A sum of rupees 80,000 was deducted at source from the contractor. The statement of the tax deducted at source under section 200 was filed on 23rd of March 2023 for the quarter ended 31st of December. By when the statement should have been filed, students, by the way? The statement, students, should have been filed by 31st of Jan. 1 month from the end of the quarter you have to file the statement. 1 month from the end of that particular you have to file the statement. So you should have filed the statement by 31st of January. So TDS statement has to be filed by end of the quarter plus 1 month. End of the quarter plus 1 month. And therefore in this particular case, students, you have filed on 23rd of March. So therefore if you have filed on 23rd of March, how much is the delay? Delay is 28th day of February and 23 days of March. 28 days of February and 23 days of March. So therefore in all it is 51 days, students. 51 days. So 51 days, and per day, students, the fee will be charged will be 200 rupees. So in all, how much is the amount? The amount, students, in this case, if I'm not mistaken, 10,200. 10,200. You just calculate, Calci, I don't have it. So you people only have to deal with it. So 10,200, students. But the maximum amount, students, that would be the TDS in this case. Keep an eye on this amount. How much is the TDS to be deposited for that quarter? 80,000. So you have to always keep in mind that the fee which you are paying under 234E, whether that fee is more than that TDS for that particular quarter. If it is not more than the TDS for that particular quarter, then in that case we will settle down with that particular fee amount. In this case, so we will settle down with that particular fee amount. But if it is more, if the fee is more, then the maximum is 80,000. So that is the point that has to be considered. Now this is an important section. See this point. Is there any remedy available for reduction or waiver of the fee? There is one more question which I'll put, point number 4. Let me ask you that first question first. 234E fee, can that be allowed as deduction? Fee for the late filing of the statement, can that be allowed as deduction? And the answer is yes. It is not a penalty. Please understand, they have used the word fee. And because it is not in the nature of penalty, therefore in this particular case it will be allowed as deduction. Had it been a penalty, then no deduction would have been allowed, but since it is in the nature of a fee, therefore it will be allowed as deduction. Okay, so therefore keep that point in mind. Now, is there any way to get the waiver? CBDT only has the power, students, as far as waiver of interest, fee, primarily, or condoning the delay for late filing of returns. Only one authority has the power to give such waiver, and the authority happens to be CBDT. So CBDT power, students, for waiver of fee, waiver of interest, condoning the delays of late filing of return. Keep this particular point in mind. CBDT is the only authority who has the power to do so. I hope that all of you are clear with this one. Rest of the question, students, are the similar one which you have discussed in terms of the same. So let's me now come back to the original particular part of the TDS. Quickly we'll run up this particular part of TDS part. Now TDS, students, I strongly feel that they may not be that keen on asking those level of questions, because there are already heavy loaded case laws which I can see which are being there. Which is most expected is my gut feeling, and this 206C1H, and that's the reason why I did first TCS and that 194Q, because that I feel is more important, and that case law which we have done it, and this fee part that we have discussed, this is more important, students. So far as TDS and TCS are concerned, is my gut feeling for this attempt. That's the reason why I did that thing first, but I will still quickly revise this particular part for all of you. So let's complete this particular chapter, students, in this context. So now, students, if you have this particular part over here. Now, students, over here, if you see in this context, what is the situation? So the situation, students, that you all can see, 194C, I already told you, students, we always have to do 19. Students, in the TDS part, compartment number 1. What is the compartment number 1? C, J, H and M. This is the first compartment. Second compartment also I'm writing for all of you. 194I, 194IA. 194I, 194IA. This is second compartment. Third compartment will build up as we will progress. The TCS compartment I already made a TCS compartment, specifically for that excess loading on that excess, the TCS and TDS. So LRS, other than the tour operators case, so that is there, 206C1H, and thereafter, students, in TDS also 194Q and 194N. That is already the compartment has been made. Now apart from this one, students, 194C, J and H. So C, J and H and M together. So that is for the payment of the contractor, students. Payment of contractor, students. Here the TDS rate, as you all are aware, is 1% and 2% respectively. 1% and 2% respectively. Who should be now here? The nature of payment, all of us are aware that it should be in respect of works contract. The nature of payment, students, we all are aware that it should be in the nature of works contract. But the rate is different depending upon who is the recipient. So if the recipient of the works contract or the recipient of the amount is an individual NHUF, then it is 1%. Any other person who is the recipient, 2% is the rate. Okay, so that is on the basis of the pay, the rate is changing. There is one more section where on the basis of the pay, the rate will change. There is one more section where on the basis of the pay, the rate will change. Other than that, it is not on the basis of pay, it is on the basis of nature of payment. Other than this, two sections where the rate fluctuate, the TDS rate fluctuate on the basis of the pay. In all the other cases, it is on the basis of the nature of payment that the rate is determined. Okay, now quick point students, which is there, no TDS or TCS would be applicable in the case where it is the works contract is for personal expenditure of the individual or the HUF. So at my home repair work, it's a work contract. So because it is a personal expenditure, no TDS and TCS. And second, and this is an important one students, the contractor. So if supposingly I have paid to the GTA, I have paid to whom? To the GTA students. Yes Satish, I have paid to the GTA, and the payment to the GTA students which I have to that GTA which is not owning 10 or which is not owning more than 10 trucks, which is not owning more than 10 trucks at any time during the previous year. So if he is not owning more than 10 trucks at any time during the previous year and the GTA has furnished the PAN and the GTA has furnished the PAN, in that case no TDS will be applicable. However, if the same GTA, if he does not furnish the PAN, if he does not furnish the PAN, then not only that the exemption will be lost, but the TDS rate, because you have not furnished the PAN, it will go to 20%. Why 20%? Now 206AA of 20% rate will be applicable on non-furnishing of the PAN. So not only that you lose the exemption, but your TDS rate will also be at 20%. That is the point. The other one students you should just keep in mind is this, in this context. Instead of PAN, if he furnishes Aadhaar, then students, instead of PAN, if he is furnishing Aadhaar, will that be considered to be a sufficient compliance? Instead of PAN, if he is furnishing the Aadhaar, will it be considered sufficient compliance? To that the answer is yes. So if instead of PAN, if he is furnishing the Aadhaar, that Aadhaar will be a sufficient compliance and he will continue to get the exemption. So wherever there is a requirement to furnish the PAN, instead of PAN, if the Aadhaar has been given, it will be considered as sufficient compliance. By the way students, what is works contract? Just keep in mind, in the works contract, if I have provided the goods, I or my related person, if I or my related person have provided the goods, and on that particular goods the other person has undertaken the work. If I or my related person have given the goods and on that goods the other person has performed the work, that is a works contract. Now couple of quick particular case students. I have given the goods for warehousing. Which warehousing? The cold storage facility. Now cold storage facility is to preserve my goods, and because the cold storage facility is for preserving the goods, therefore it is a case of a works contract. Okay, and the TDS will be deducted under section 194C and not under 194I. That cold storage facility is not a renting case. That cold storage facility is for preserving the goods, and therefore a work has been performed, and hence no TDS under 194I, but the TDS will be under 194C. Second point students, if supposingly a television broadcaster, they approach a television production house, a broadcaster channel, they have approached the television, the TV serial production house for making 52 episode serial, on the basis of the contract received, the television production house, they are making those 52 episode serial so as to be put up in the prime time in that broadcasting channel. To be put up in the prime time in the broadcasting channel. So is the payment, now who will make the payment? The broadcasting channel. To whom they will make the payment? To this television production house. So whether that payment is in regard to the works contract, answer is yes. That payment will be considered as a payment towards the works contract, and the reason is very clear. Why it is the payment in relation to works contract? Because there was already the work was being given to them to make those films or the serial. So this is a payment towards the works contract, and accordingly, students, the TDS under 194C will be deducted. But already the film was being produced even without the works contract by this particular production house. Already the film was being produced, and that film was being sold to a particular broadcasting channel. Already the production house has made this serial without any pre-existing order in hand, and that serial has been sold to whom? To this particular TV channel. In that particular case, whether this is a works contract? No, this is a sale of content. This is a sale of content, students, and accordingly it will not be considered as a works contract payment, and hence it will not be considered in this regard. So therefore it is a sale of content, and hence it will not be considered as payments towards works contract. Now 194J, students, that you can see there are how much item? Professional fees. So here it is professional fees, technical service, royalty and non-compete agreement, and for each of this amount the limit of 30,000 is separate. For each of this amount the limit of 30,000 is separate per annum. Please compare this. So if supposingly to a particular firm, a company is making two payments. One payment is royalty 25,000, another payment is towards professional fees 25,000. Two payments are made, so in totality is 50. But I told you what, for each category of payment the limit of 30,000 has to be considered, and since each category the limit of 30,000 is not exceeded, that's the reason why no TDS under 194J. Is that clear to all of you? Now come to the next particular point, students, which is of 194I. In 194I, students, wherein there is a renting of what? Renting of immovable property, plant and machinery, and furnitures. So therefore, and the limit over there is 2,40,000. Now if a factory is being given on rent, and the rent for the building is say 1,20,000, rent for plant and machinery is 1 lakh, rent of furniture is 40,000, and the limit of 194I is how much? 2,40,000. So individually if you see, it does not cross the threshold of 2,40,000. Individually if you see, it does not cross the threshold of 2,40,000. But if I combine all the three payments, now it crosses 2,40,000. Yes. So in 194I, it is a combined limit that has to be seen. There is a combined limit that has to be seen. Now therefore, students, here also 194J, just keep this particular point in mind. And what is that? Just keep this particular point in mind in 194J. That is, if the sum, no TDS, if the sum has been paid, no TDS, students, if the sum has been paid for personal purpose. So if the fee has been paid, I have hired an interior decorator and I have taken a professional service for interior designing of my home. So that is a professional payment. For interior designing of my home, that is a professional payment, but for personal use. And therefore in that particular case, again, no TDS under section 194J will be deducted in this regard. Now students, apart from this particular part, students, let's come to 194H, brokerage part. Now if you see over here 194H, which is for the brokerage part, students. Now accordingly, the principal is making the payment to the broker. Now here is the case law, which is that particular judgment which is covered in your RTP, most likely case law, students. 194H, commission in brokerage. So who is making the payment to whom? Principal is making the payment to the agent, and the payment should cross the threshold of 15,000. Okay, if the payment will cross the threshold of 15,000, in that particular case, the existing rate, all you know, is 5%. So 5% is the rate of TDS to be applied on the same. 5% is the rate of TDS to be applied on the same, and that exactly is the point. I hope that all of you are clear with this one. But no TDS would be applicable if what? If it is in respect of commission and brokerage of the security. So if I'm selling and buying of the shares, say of shares in a stock exchange, for which I will make the commission payment to the stockbroker. I will make the commission payment to the stockbroker. On that commission payment, no TDS. So students, this is what is very important in this regard. This is what is very important in this regard. Now, brokerage and commission, students, when you talk about this one, there has to be a principal and agent relationship. So in absence of a principal and agent relationship, this particular TDS under 194H will not be made applicable. In absence of principal and agent relationship, this TDS under 194H will not be applicable. Other important point, students, is that the commission, here we are talking about what? The payment of commission. So even that commission that you are paying to the agent, the commission that you are paying to the agent, that should be known to you. The commission that you are paying to the agent should be known to you. If the commission remains unknown, then in that situation, can you deduct the TDS on that amount which is not known to the principal? Answer is no, and therefore that commission is something that should be known or ascertainable. Now on this particular backdrop, this case law, which is the most important one, question number 18, it was being targeted in the examination. All of you are aware of this particular part, isn't it? Now generally, students, you know one thing, that there are two case laws actually. One was at Singapore Airlines, and again this particular case law is also there. Now in this case, students, just what was that in the old case law? In the old case law, there was a case where the agent used to purchase the ticket from the principal and at a predetermined price. Now on that, say 5,000 rupees, say predetermined price. On that, the TDS, on that the commission was being paid by the airline to that particular agent. But at what price finally the agent will sell, that was something was not under the control of the principal, and the principal had no means to know what would be the price at which they will sell that particular tickets, because it is a 5,000 rupees underwriting already has been done. So therefore the agent will pay only 5,000. No other payment will come from agent to whom? To the principal. Whether that they sell the ticket for 20,000, they sell the ticket for 2,000, they will pay only 5,000. So therefore in that situation, in that case law, the principal was not knowing what is the payment which the agent has received. So therefore, whatever is the extra amount which was received by the agent on the sale of the tickets, on that no TDS. But now a new case law has come, and in the new case law, students, what is the important point over here? So here is an agent name as Element Travel, which is a travel agent, students, and they are earning what? A commission on 5%, standard commission of 5%, as well as a supplementary commission. Okay, the airline students, so they were getting what? 2 commission. What is the 2 commission? Standard commission as well as a supplementary commission. Now the airline company were deducting the TDS only on standard commission. Only on the standard commission, but not on the supplementary commission. Now see over here, the question that needs to be answered over here is this: is the airline company getting the entire amount in its hand, and then it is paying the standard commission and the supplementary commission? That is the first question. Question number 2: is the airline company knowing what is the actual amount at which the agent is finally selling finally selling the ticket so as to know how much is the supplementary commission that they will have to give to the agent on that final selling price. Is this data available? Is this data available? So two questions. Does that sale proceed comes to the airline company? The final sale proceed, does it comes to the airline company? And what is the second question, students? The second question is, does the airline company know at what price that the agent is selling the tickets, so as to determine how much is the standard commission and how much is the supplementary commission? These are the two questions, and this is the paragraph which is unique as compared to the old case law of Singapore Airlines. This is the paragraph which is unique to that old case law of Singapore Airlines. Please have a look in this case. No, I mean, now please have a look. The details of the amount at which the tickets were sold are transmitted by Element Travels to an organization known as BSP, which functions under the IATA. So it means they tell the details. This is the price. This auxiliary amount charge on top of the net fare was portrayed on the BSP as a supplementary commission. So they already said that this extra amount, that 5,000, they may have sold at 9,000 rupees. So how much is the extra amount? 4,000. So 4,000 was being transmitted in that BSP, bill and settlement plant, as what? As an extra commission, supplementary commission in that of Element. The contract between the Element Travels and the airline stated, what the contract state? That all money received by Element Travels were held as the property of the air carrier. All the money received by Element Travels were held as the property of air carrier. So unlike in the old case law where I gave you 5,000, now you are not supposed to know what I am doing further. So in that case, my airline company 5,000, that is it, matter end. Here, what is the contract? All money that the agent has received will be held as the property of the airline air carrier until they are recorded in the BSP and properly gauged. Properly gauged means properly understand. So that entire 9,000 is of whom? Friends, the entire 9,000 is of whom? The entire 9,000 is of the airline company. And if entire 9,000 is of airline company, now in that case, does the airline company know from that 9,000 how much is a supplementary commission? Yes. Anything in excess of 5,000 is a supplementary commission. Does the airline company knows this? Yes. From where they will come to know? From that BSP organization which is known as BSP. From where they will pick up that this extra 4,000 is the supplementary commission. So therefore, whether the airline company will they be under the obligation to deduct the TDS on both the standard commission as well as supplementary commission? Answer is yes. Answer is yes, students. So therefore, students, in this particular case, this is going to be there, students. So therefore, the 3 points that you should always keep in mind in this particular case law is this only. First one, students, first point that you will put across is that the monies were held by the agent as the property of airline company. This is the one point that you have to write. Second, the supplementary commission amount is known to the airline company through the BSP organization, bill and settlement plan organization. Therefore, the supplementary commission will be subject to TDS under section 194H at the rate of 5%. This 3 needs to be there, students, in this context. This is the real crux of this one. I hope that all of you are clear with this one. Now with that, let's come back to this particular part now on our discussion. So now, students, let's come back to this discussion over here. So this is what, students, you just keep in mind this proposition, and now coming back to this, to our particular reference point. Students, I told you that 194M. Now in all the 3 sections, students, now first of all, works contract and 194J. Works contract and 194J, students, this works contract payment and payment for fees for professional and technical service should not be in relation to personal use. Should not be for personal use. That is there for 194C and 194J. Okay, one more point which is common, and what is that? If the payer, students, be careful, if the payer, students, is an individual and HUF under these 3 sections, which 3 sections? 194C, 194J and 194H. If the payer is individual and HUF, then the payer will not be required to deduct TDS on such payment unless in the last year their turnover is more than rupees 1 crore or more than rupees 50 lakhs, as the case may be. Unless their turnover is more than rupees 1 crore or more than rupees 50 lakhs, as the case may be, students. Is that point clear to all of you? So unless and until their turnover crosses the threshold of 1 crore or 50 lakhs, as the case may be, the individual or the HUF payer will not be required to deduct the TDS. Fine. And on the backdrop of these 2 important features, which 2 important feature? One, if it is for personal purpose, then no TDS under these sections. And what is the second point I told you? Second point I told you was, if the payer is individual and HUF, then in those sections the TDS will not be deducted unless what? Last year their turnover is more than rupees 1 crore or 50 lakhs. So supposingly, if I am a salaried employee, students, okay, and I am paying 50 lakhs or 60 lakhs, 60 lakh, students, for works contract. Or let's say this particular thing, forget salaried employee. Supposing I qualify as my CA, I want to get into a practice straight away, and I want to make a very good office. My last year turnover is 0. I am an individual payer. My last year turnover is 0. And I am making a payment to the work contractor of 70 lakhs. I am making the payment to a work contractor of 70 lakhs. Whether the TDS under 194J will that be deducted? Whether the TDS under 194J will that be deducted in this particular case? 194C will that be deducted? No. Why? Because if I am an individual payer, the question of deducting the TDS under 194J will not arise, because I am the individual payer and my last year turnover was not more than rupees 1 crore or 50 lakhs, as the case may be. And that is the reason why, students, for such high value payment which has been made either for personal purpose, please be careful, 194M is for what, students? 194M is for high value payments which has been made. 194M is for the high value payment, students, which has been made, isn't it? High value payment which has been made. So 194M in this particular context, students, is for 2 purposes, 2 things, students, either for a high value payment for personal high value payment which has been there. 194M is meant for the high value payment, students. Do you all get this one? High value payment means in excess of rupees 50 lakhs. In excess of 50 lakhs. Now, in this case, either for personal purpose, or for what, students? Either it is for personal purpose, or in this case, or the individual or HUF is not having turnover in the last year of more than rupees 1 crore or 50 lakhs, as the case may be. Individual HUF is not having turnover in the last year of more than rupees 1 crore or 50 lakhs, as the case may be. So this is about the high value payment, students, in excess of rupees 50 lakhs. Payment of what, students? Payment of what nature? Payment of what nature? Nature of three. One is that 194C. Another is that of 194J. Or third one is what? 194H. Okay, this payment is in the nature of 194C, 194H or 194H. So these sections cannot be made applicable because the reasons I have already told you. Either it is for personal purpose or the payer who is an individual payer. Who is a payer, students? The payer is an individual HUF is not having turnover in the last year of more than this thing. So that's the reason why, students, that they have made this point, and therefore the TDS rate would be at the rate of 5%. Students. The 5% is the rate of TDS probably which has been there in this context. That is what 194M is all about. I hope that all of you are clear with this one. Now quickly we will run through the other one, students. For the securities part, students, I don't think they will target in the examination, but still quickly running through because I think next 20 minutes we should be done with this particular provision of TDS now. So very quickly, students, I hope that all of you have taken a note of this particular part. Now if you see the next particular part which has been there on the TDS particular segment. So the next section, no sorry, students, INIA I told you. Already I told you in this case, students. So INIA, students, is what I have told you already in this case. For the TDS in this regard, this 2,40,000 is the limit to be considered in aggregate. 2,50,000 is the limit that you have to take it in aggregate, students. Fine. So in aggregate we have to see this limit of 2,40,000 per annum for all furniture, plant, building. Now 2% is the rate for plant and machinery, and 10% is for land and building, and also for furniture and fitting. So any rental which is paid for furniture and fitting or rentals paid for land and building, the rate of TDS would be 10%. Whereas for plant and machinery, the rentals paid is only 2%. That is the point that you should keep in mind. Now there is this particular herein, the case of the land and parking charges. This is also very important case law which is very frequently asked. Land and parking charges, students, in this case, whether on the land and parking charge which the airline company has to pay, land and parking charge which the airline company has to pay to whom? To the airport authority. Whether that land and parking charges, whether that will be paid, whether that will be subject to TDS under 194I, that is the issue under consideration. So obviously, students, when you are paying a rent is paid to use the immovable property or the plant and machinery or the furniture to use. When you talk about use means what, students? Possession and control. Possession and control. So it means that the airline company which is making the payment should be having the possession and the control over that parking facilities. Do they have the possession or the control? Answer is no. So what we have written over here, neither the airline company has the possession over the parking area, nor they have the control over it. Neither possession nor they have got the control over that parking area. Therefore the rent paid will not be for use of land. The rent that has been paid is not for the use of land, and hence no TDS under section 194I. No TDS, students, under section 194I. Is that point clear to all of you? Just keep this particular point number 1 also in mind, students. The REIT, students, you know, in this case, the REIT is getting a rent on the property which it has given on, which it has let out. The REIT, students, is getting a rent on the property which they have given it on rent or let out. Now that rental income received by a business trust that rental income received by the business trust, is it accessible in the hands of the REIT, or it is accessible in the hands of, in whose hands that the rental income is assessed? In the hands of the REIT or in the hands of whom? Quickly! In the hands of the unit holder. So it is accessible in the hands of the unit holder, and because it is accessible in the hands of the unit holder, the tenant who are paying the rent, to whom? To the REIT. On such payment, will they deduct TDS? On such payment, will they deduct TDS, students? Answer is no, because in the hands of the REIT, which is the recipient of the rent, but not the person in whose hand the assessment will be made. Assessment is made of such rent in the hands of the unit holder. So the payer, who is a tenant who pays the rent to whom? To the REIT, that payment will not be subject to TDS, because in the hands of the REIT it is exempt. I hope that all of you are clear with this one. In the hands of the REIT, students, is it exempt? And the answer is yes. That exactly is the point, students. All of you. This is how the things has to be looked upon. Now, as a thumb rule, students, wherever there is an exemption in the hands of the payee, then the payer will not deduct TDS. We all are aware of that yesterday also in the alternate tax regime. We discussed this particular point. Remember that payment has been made to a non-resident outside India for providing us services outside India. That commission which was being paid, isn't it? Now, was that commission chargeable under the Act? No. So if I've made the payment to that agent, non-resident outside India, because that commission is not chargeable under the Act, therefore on that TDS is not deductible. And if the TDS is not deductible, then no disallowance will apply. Same thing, students, you should keep it in mind over here also, Himanshu. So with that, students, we will just proceed further over here. One more particular point, students, which has been there. I don't think that will be that important, but let me quickly run through this one over here. Students, the rental has to be, if there are two co-owners, if a house property, say a residential house property or any house or commercial house property, for that there are co-owners, then the limit of 2,40,000 students will be applicable for each co-owner separately. The limit of 2,40,000 should be applied on each co-owner separately and not together. This co-owner concept is also going to come in that section of 194 LA and all the stuff, that sale of immovable property, 194 IB, sorry. In that 194 IA and IB, in that case also this co-owner concept is going to come. We will see in that particular case. I hope that all of you are clear with this one now, students. That is it. Coming to the next one, students, 194 IB. 194 IB is a rental of land and building. Now same issue would be there. Now be careful, students, one more thing. In 194I, in 194I also the same thing is there. What is that? If the rent is paid by the individual, if the rent is paid by the individual or the HUF, then the obligation to deduct the TDS under 194I will arise only if the last year turnover is more than rupees 1 crore or rupees 50 lakhs, as the case may be. If the last year turnover is more than rupees 1 crore or rupees 50 lakhs, as the case may be. That is the point wherein this 194I will kick in for individual and HUF. But supposingly I am a salaried employee and I am staying where? Staying in a luxurious apartment which has been taken on rent. I am staying in a luxurious apartment which is been taken on rent, and per month I am paying a rent of rupees 1 lakh. Now I am a salaried employee. So I am a salaried employee, but I am paying a high rental. Now in that case, because I am an individual, last year turnover of my business or profession is not applicable, and hence even if I am paying a high rental, no TDS under 194I. And that is the reason why, to capture these high rental payments made by the individual who don't have business or profession, or their turnover in the last year is not more than 1 crore or 50 lakhs, as the case may be, but they pay a high rental amount, in that case the TDS has to be deducted by these particular tenants under section 194 IB. Under section 194 IB, and for that there is one point which is there, only once, two special points, students, for them. And what is that? Only once they have to deduct TDS. The requirement will be only once that they have to do, And what is the once that they have to do, students? Once, and please understand, just like the way we discussed for 194M, 194M was a stopgap for 194C, 194J, 194I. Sorry, 194C, 194J, 194H. So 194M was a stopgap for these three sections. By the way, what is the rate of 194M? The rate of 194M was 5%. On the same way, 194IB is a stopgap for 194IA. 194IB is a stopgap of 194IA, and therefore what has to be the rate? The rate has to be 5% also. Same here also. Okay, only two important points that you should be clear in your mind. Two important points over here. Point number one, here this individual would be paying the rent only once, will be deducting the rent only once in a year, and that once in a year would be when the credit for the last month of the previous year, in this case. So whenever he is doing the last month rent, when he is doing the credit or the payment for that last month, if whichever is earlier, for that only, students, he will be required to deduct the TDS for the entire year. So in the last month, he will deduct the TDS for the entire year. And second one, students, is about the fact that in this case, the tenant, obviously, he will not be taking this TAN number and all, the TAN and all. And if he is not taking the TAN number, students, then the question of what? The question of all that the filing of the quarterly statement, students, the filing of the quarterly statement will not apply, because I am not supposed to take the TAN in first place in this situation. So do you expect me to keep filing quarterly statements and all? Answer is no. That is the point. So we are done with this particular part. Now, students, the next section which is there, so 194IA, 194I and 194IB is the second compartment. The third compartment, students, over here is that of the third compartment. Students, what is the third compartment? The third compartment in this particular case is that of the interest and dividend. The third compartment, students, is that of the interest and dividend. Now, if you see over here, the interest 193, they will not ask you a question on this. 193, they will not ask you the question on this, but still, even if it is not asked, still remember 10% is the rate, because for securities, the rate is constant 10% in all. For security, students, the rate is constant 10% in all, whether it is 193, 194 or 194A in all the three sections. So the third compartment is 193, 194 and 194A. So interest and dividend, this is the third compartment. Okay, this is the third compartment. So 193 is actually on the securities part. Can you see this one? 193 is actually on the securities part, the TDS aspect. Only one thing, students, you have to remember is this one. If the interest on debenture, if the security is a debenture and the company is paying interest on debenture, and to whom they are paying interest on debenture? To individual and HUF, to resident, individual and HUF. Be careful on this one. So if the interest is paid to a non-resident, in this case, you will not get an exemption. That was also an MCQ question, because for non-resident you go to 195, and that's the reason why if it is the resident individual, only then the exemption will be applicable, provided the interest amount does not exceed what? 5,000 rupees. 5,000 rupees. Now, as far as dividend is concerned, under section 194, dividend is concerned, students, 194, whether the TDS will it be required to be deducted? And the answer is yes. 10% is the rate. Again, the exemption is if the dividend is paid to a non-resident, students, if the dividend is paid to a non-resident, then whether and the dividend amount is less than 5,000 rupees. Whether the exemption of TDS is it applicable? No. The exemption of TDS is applicable only if the dividend which has been paid is to whom? To a resident individual, and the amount of dividend is not more than 5,000. Now, dividend will include all our students. Dividend will include all. And what is that all? From 222A to 222E, the entire amount will be considered as a dividend. 222A to 222E, the entire amount, students, will be considered as dividend. Now, in that situation, students, if you all see, in this case, 222E is more important in this scenario. And if you can recall 222E dividend, what is the 222E dividend? When the loan in advance is given by a closely held company or a private company to whom it has been given by the closely held company or a private company to either the shareholder having 10% or more of the voting power in such company. So either you give a direct loan to them or you give an indirectly to whom? Not to the shareholder but to a concern in which such shareholder is having a substantial interest, which means 20% or more at any point of time during the previous year. So if such shareholder, which shareholder? The shareholder who is having 10% or more in this private company. So if such shareholder is having a substantial interest in any of the concern and the private company is giving the loans and advances to that concern, then again it is a deemed dividend under section 222E, taxable in the hands of whom? In the hands of such shareholder. Taxable in whose hands, students? In the hands of such shareholders. That is the point, students, which is to be considered. Okay, now only one thing you should realize is that, students, the dividend which we talk about, students, has to be out of the accumulated profit. Accumulated profit. The dividend has to be out of the accumulated profit. Please bear in mind, if you see over here, the accumulated profit, students, can you see this accumulated profit of the company, whether capitalized or not? So for 222A, 222B, 222C and 222D, this is what will be applicable. But when it comes to 222E, in this case, 222E, the accumulated profit is no capitalized profit to be considered. No capitalization of profit to be considered for 222E. So in this context of 222E, students, what happens? You will never consider the capitalization of profit at first place. You will never consider the capitalization of profit at first place so far as 222E is concerned. I hope that all of you are clear with this one. You'll say, sir, what is capitalization of profit? Bonus. If a company is issuing bonus, then what happens? Part of the profit will be capitalized. So what happens in the other case of dividend of 222A to 222D? If a part of the profit is capitalized, then that portion of the profit is also to be considered as a part of the accumulated profit. As a part of the accumulated profit. To decide the quantum of dividend. To decide the quantum of dividend, whereas in the case of 222E, supposingly, students, the loan has been given. Let me give an example. Supposing the loan has been given is of 25 lakhs to the shareholder. Which shareholder? Having more than 10% or more of the voting power. Whereas the accumulated profit, students, which is there is say 24 lakhs. Okay, and they tell you further they will tell you further, in this case 2 lakhs is capitalized by issuing bonus. So in that case, students, how much is the accumulated profit? How much is your accumulated profit? In this case, accumulated profit is 24 lakhs, not 26 lakhs. It will be 24 lakhs, not 26 lakhs. All of you agree to this one? And if your accumulated profit is 24 lakhs, students, accordingly, you know, in this context, if your accumulated profit is 24 lakh, students, what exactly we are going to say? Therefore, you are going to say that yes, up to the accumulated profit of 24 lakhs is my deemed dividend of 222E. Loan is 25 lakhs, but how much is your accumulated profit? 24 lakhs. So therefore 222E is how much? 24 lakhs. Okay. Now the company which is making the payment of loan, of rupees 24 lakhs, in this case, what we will say, whether they will be required to deduct TDS under 194 at the rate of 10%, and the answer is yes. The company which is making the payment of TDS, 10% of the TDS has to be deducted on this 24 lakhs. Is that point clear to all of you, students? So with that, students, in this particular context, this is the 24 lakhs which you should always bear it in mind. I hope that all of you are clear with this one. Okay. Now, students, one last point which I just tell you, but if in the 222E, please be careful, if in that 222E, the loans and advances which are being given, students, which has been given in that 222E is in the form of an commercial advances or trade advances. What is trade advances? Trade advances is that, like for example, one of the shareholder, he is also a works contractor, and the company has hired him for doing the works contract of the office. So for that purpose, the company has given the shareholder an advance of rupees 20,000 for doing the works contract. So that advance, will that be subject to TDS under 194? Because it is a deemed dividend of 222E. Will that be considered as deemed dividend of 222E? No, because it is in the nature of trade advance. Because it is in the nature of trade advance. I hope that all of you are clear with this one. So trade advance, no deemed dividend of 222E. That is the bottom line. With that, students, we are done with this particular part. Now, last point, students, is 194A. 194A. Now, in this case, interest other than interest on securities. Again, the same thing. In this case, who is the payer? Payer can be any person, but if the payer happens to be individual or HUF, in that particular case, the individual and HUF, last year the turnover of business should be more than 1 crore or profession more than 50 lakhs. Rate is 10%. I already told you. Now, please be careful over here. Here also, the interest other than interest on security, the limit is 5,000. The interest other than the interest on security, students, the limit is what? 5,000 rupees. In this case, 5,000 rupees is the limit. However, be careful. 40,000 or 50,000 is the limit if supposingly the bank is making the payment. Bank is making the payment. Payment is made by the bank primarily in the form of interest on FD. So interest on FD or deposit, the payer is the bank and the interest is paid to whom? To a senior citizen. Then the TDS under 194A on such deposit or the FD will be applicable for a senior citizen if the interest amount is in excess of 50,000. And if it is other than that, senior citizen, then TDS if the interest amount is in excess of 40,000. I hope that all of you are clear with this one. Now, in this context, students, in this particular context, no TDS. Now, can you see this one? Point number 2, no TDS if the interest is paid to the students, if the interest is paid by the firm to its partner, again the same thing. So interest on capital. So if it is interest on capital paid by the firm to its partner, no TDS. But if the partner is a non-resident, then the section applicable for TDS is 195, not 194A. Again, this is an MCQ question. So then in that case, it is 195 and not 194A. And because then it is 195 and not 194A, therefore what? Therefore, the exemption of TDS will not be applicable. Which means that the firm will have to deduct TDS if the partner is non-resident and the firm is paying interest to such partners. But if the partner is a resident, then on that interest, the TDS, students, the TDS, will it be deductible? And the answer is no. If the partner is resident. So students, with that is it. Now, in this regard, students, this is also you are aware of it, students. In the case of business trust, SPV is paying interest and dividend to whom? It is paying interest and dividend. SPV is paying the interest and dividend to the business trust. Now, this interest and dividend is not accessible in the hands of the SPV, but it is accessible in the hands of whom? It is accessible in the hands of the partner. This interest and dividend is accessible in whose hands? In the hands of the unit holder. So it is exempt in the hands of the business trust. So if it is exempt in the hands of the business trust, whether the SPV which is making the payment of interest to the business trust and they fail to deduct TDS, so in computing the business income of the SPV, whether you are going to disallow this interest expenditure, in computing the business income of the SPV, whether you are going to disallow this interest expenditure, and the answer is no. Why? Because the payee is the business trust, and in the hands of the business trust it is exempt, and hence no disallowance will take place in the hands of the SPV. Next compartment, students, is your 194B and 194BB. Immediately after the lecture, students, you are going to go through it and wrap it up. immediately after the lecture, students, you are going to go through it and wrap it up. Is that clear to all of you, students? Fine. So students, that is what it is. Now the next section, students, which is there is this particular part. Any sum under the life insurance policy, students. Now just keep this particular point in mind, students. A very quick and important revision for all of you. So 194 DA, this is an important one for the, and then the capital items, and then finally the 3 sections. This particular thing is over then. 194 DA, students. 194 DA. So 194 DA, students, any sum under the life insurance policy. Please be careful over here. So insurance policy has been taken. Students, insurance policy has been taken. Now before 1st April 2012, then how much premium you should pay to get an exemption under 1010D in respect of the sum received from the insurance policy? How much insurance premium you should pay annually to get the exemption under 1010D in respect of the sum paid? So therefore, the premium, if the policy is taken before 1st April 2012, then the premium should not exceed 20% of the sum assured. If the premium has been taken, students, if the policy has been taken, students, on or before 1st April 2012, then 10% of the sum assured. 10% of the sum assured, students. Is that point clear to all of you? Is that point clear to all of you, students? 10% of the sum assured. 10% of the sum assured. Fine, students. That is the point. 10% of the sum assured. Now, if in such case, if your premium does not exceed that, then the maturity proceed is fully exempt. The maturity proceed, students, is fully exempt. Fine, maturity proceed is fully exempt. So this section will come into play. 194 DA comes into play, students, when your premium is more than this sum assured. When the premium is more than the sum assured, then only this section comes into play. When the premium amount is more than the sum assured, then only this section comes into play. Is that point clear to all of you? So this is what primarily the position is in this context. 1010D. So whenever 1010D is not applicable, because if it is exempt, then on the payment of the maturity proceed, will you deduct TDS? If it is exempt, then on the payment of the maturity proceed, will you deduct TDS? No. So it means that the premium that you are paying is more than this 10% and 20% respectively. Premium that you are paying is more than 10% and 20% respectively. All of you agree to this one? Yes. Now therefore, because it is more, 5%, now TDS would be 5%, students, of the sum paid. Now not sum paid, the 5% of the income which comprises on this maturity proceed. So whatever is the income in this maturity proceed, on that income 5% is the rate of TDS. On that income 5% is the rate of TDS. On that income 5% is the rate of TDS, students. Now if you see this one very carefully over here, I just have given you one example over here in this context. From this example quickly, 1st April 2018 I have taken the policy. Okay, and the maturity has happened on 31st March 2023. Maturity has happened on 31st March 2023. How much is the maturity? 15 lakhs. Now from 1st April 2018, you have paid the premium for how many years? 18, 19, 20, 21, 22. In this case. Okay, so 5 years premium you have paid. In all 5.5 lakhs. So how much is your income component? Income component is 9.5 lakhs. In that 15 lakhs, income component is 9.5 lakhs. And now on that 9.5 lakh, students, in this case, you deduct TDS rate of 5% on that 9.5 lakhs. Is that point clear to all of you? Is that point clear to all of you, students? And that exactly is what the situation would be. So with that, students, this is what it is in respect of this regard. So now then, students, where it went. So now, students, we are done with this one also. Now the next section, students, as you know, it is on the capital gains part. Three sections are there for capital gain, students. After this, the three sections which are being there. Now, before I do that, students, just let me do this one, students, for all of you. Students, over here, (194R). Next section, students, is 194R. Deduction of tax on benefit of perquisite pertaining to business or profession. Finance Act 2022. There is one beautiful MCQ also which has been there. And the value of the benefit, students, the value of benefit should be more than 10%. Then in that case, what happens? 10% of the value. 10% of the value. In this case, students, the TDS will be deducted. On the 10% of the value, the TDS will be deducted. Students, if you remember, there is this in RTP, there is one question on this husband and wife. Now, I'll just summarize this particular question which is there in the RTP on this 194R. If you can recall that there is an RTP question which has been there. Now, husband and wife, husband is the employee and wife is just accompanying husband to a conference. The date of conference, students, is say 20 and 21st. The date of conference is say date 20 and 21st. Okay. Now in this case, tell me one thing, the flight expenses which is borne by the company for husband, the flight expenses primarily which is borne by, so they have arrived, the husband and wife, they have arrived, both of them have arrived, he is an employee, wife is only accompanying. They have arrived on 18th. 18th they have arrived. Now you tell me one thing, the flight expenses of husband and wife, whether husband, will it be considered as a perquisite? No. Because he is an employee, he has to attend that conference on 20 and 21st. What about for wife, students? For wife, it will be considered as a perquisite. So far as a stay is concerned, students, now be careful. Stay is concerned, stay on 20th and 21, that is a conference day. Or may I say, students, I told you, remember, if you remember this one, husband will reach one day before the conference, which is 19th. Any case, students, people generally 20th is a conference, so you, and this is the 2 days conference, residential conference. So when I will reach on 19th in the evening. So stay on 19th, probably a day before. Stay on 19th and then 20th and 21st. Stay on 19th, 20th and 21st. For the stay, students, in this case, for husband, it will not be a perquisite, but for wife, it will be a perquisite. Because in this case, obviously, they have to arrive a day before a residential conference, so they will arrive with this one. Now, sightseeing was done on 18th. 18th they did sightseeing. So husband perquisite, wife also perquisite. Sightseeing, students, they have done on 18th in this case, and the company is bearing all these expenditure. So therefore, for both of them, it will be considered as what, students? It will be considered as a perquisite. Now obviously the stay on 18th and last one, students, stay on 18th. For husband, again perquisite, wife also it will be a perquisite. Husband it will be a perquisite, wife it will be a perquisite. Stay on 18th, na? 19th for that, it will not be a perquisite for the husband. 19th for that, students, it will not be a perquisite for the husband, students. Is that one clear to all of you? I hope that all of you are clear with this one. So students, with that, now in this case we will be through, we are through with this particular part of this perquisite of 194R, which I have told you in this case. So what is the rate of TDS? 10% is the rate of TDS, and the value of the perquisite should be more than 20,000. This is the question that we have discussed already in the RTP also, one beautiful question which was being there, and this is what it is. Now with that, we are done with this one also, and which will leave us to, students, this capital gains payment. Can you now do, students, in this case, the three sections which are being there, capital gains, I don't think that is very difficult. Now all of you can refer this, which section I'm talking about it. One is about, students, 194 IA. 194 IA. Now students, you're quickly, now these are manageable sections. 194 IA, 194 IC. Quickly now you are going to refer this one, and thereafter students, 194 LA. There's 3 sections. Now quickly students, 194 IA, 194 LC, and 194 B, 194 BB. Okay, these are the 3 section, students, that you will be going through it quickly. And last one, students, is 194N. I don't think now there should be a challenge to all of you. Just you can go through the same, students. Now quickly over here, finally students, in this context, that one section, students, is last one which has been there of the, this is also equally very important and could be targeted in the examination or TDS. This part, students, this question is one of the most important one, MCQ, which will be targeted, and that is based on the question of the RTP. The question on the RTP, students. Students, remember this one? This question? This question. This is also expected question, students. If it comes tomorrow, you'll remember me for this. ABC Limited has failed to deduct the TDS on payment to contractor during the previous year 22-23, even though the payment exceeded the threshold limit under 194C. Even though the payment has exceeded a threshold limit under section 194C. XYZ Limited has deducted the tax of rupees 62 lakhs at source on payment to contractors on time during the previous year 22-23. Okay, but not remitted the same up to 31st March 2024. Okay, so which of the following statement, students, is correct in this regard? Quickly, we have done this one, students. In this case, ABC Limited has failed to deduct the tax at source to the contractor during the previous year 22-23, even though the payment exceeded a threshold of 194C. XYZ Limited has deducted tax of rupees 62 lakhs at source on payment to contractors on time during the previous year 22-23, but has not remitted up to 31st March 2024. Which of the following statement is correct, students? Quickly, students. Indeed. So this, students, we have already done this particular part. All of you are aware of this particular proposition. So in that situation, students, this is what primarily the position is. This is what primarily the position, students. Yes. So we have discussed this particular scenario, students. Just remember now this. Now I'm not going to take you through the logic part of it, which we have discussed at that time. Just remember, interest of 201 money and penalty would be attracted. Interest and penalty students would be attracted in the case of ABC Limited. Interest under 201A and penalty under 271C and prosecution would be attracted in the case of XYZ Limited. In this case, so ABC will have, students, only the interest part. Just keep this point in mind, students. ABC in this case will have what? So what ABC has done, failed to deduct, whereas what XYZ has done, they have deducted but not remitted. So therefore, for XYZ, which for ABC, which has failed to deduct, interest and the penalty is what will be there. And as far as the XYZ is concerned, it will be interest, penalty, as well as the prosecution section will be attracted. Interest, penalty, as well as the prosecution. Think, you'll say, sir, why is it so? Because if you have just, again, if I have to tell you, you have told you, you have deducted the TDS, students. Students, you have deducted the TDS already. And if you have deducted the TDS already and you're keeping the money with you, it means the government money is you are keeping with you. So it is a bigger crime, keeping the government money with you and not deposited. So interest, penalty and prosecution, keeping the government money with you. In this context, keeping the government money with you. And whereas if you have not deducted it, so only interest and penalty. If you have not deducted it, then only interest and penalty, students. So this is what it is in this case. So therefore, just keep in mind, students, this particular question herein, answer is B. Just keep that particular point in mind, students. With that now, students, we are through with this particular part completely in this context. Indeed. Now, students, one last question in the RTP, students, because thereafter now RTP will not be in a position to go through it. One last question, although it is not of TDS, students, but still I just want a quick recap of this particular point with all of you. A quick recap, students, in this situation. Sorry, it is C. This is again, students. 14, it is C. Oh yes, I think. Students, of 14th, it is C. Remember that particular point. If you remember that particular thing, 201, in fact, the same thing happened at that stage also. Interest and penalty, 271C will be attracted. Interest of 20. Yes, penalty, students, there is this thing. There will not be any penalty on this one because the TDS has been deducted. Yes, students, if you recall, this same goof up has happened that time also. 14, students, it is C. Penalty, because the TDS was deducted already. So therefore, because you have deducted the TDS, therefore there was no penalty. If you can recall the discussion that we also had at that point of time, because the TDS was deducted, therefore there is no penalty. So finally, students, the answer in this case would be that when you have not deducted the TDS, no deduction of TDS, no deduction, then interest and penalty. Deduction but no payment, deduction plus no payment, then it is interest and in prosecution. In fact, that is now again, I remember the same goof up. In fact, we had it, we had done it that stage also, same thing. So when you don't deduct the TDS, students, then it is interest and penalty. When you deduct the TDS, then the penalty is not levied because that compliance is done. But the fact that you have not deposited, therefore you go to jail. So this is what it is, students. 14C. Now, students, this is the last question that I just wanted to do from the RTP, because this is an important one. This question, students, if it comes nothing like that, because this is an important one, students. Remember this part, bonus stripping, students, dividend stripping. Students, there is a concept of dividend stripping. Dividend stripping, students, which has been there. The dividend stripping, students, if you recall, I told you that from the record date, if you purchase the securities, purchase what? if you purchase the shares or the unit immediately 3 months before, immediately within 3 months before the record date is the date when the dividend is declared, or and immediately within 3 months from the record date, immediately within 3 months from the record date, you are selling what? You are selling the security. So immediately 3 months before the record date, you are purchasing the security, and immediately within 3 months, you are selling the security. Okay. Now, if this is the condition which is getting fulfilled, then students, what happens now in this case? The purchase the shares or unit of the REIT. Say I have purchased 120. Now this would be at come interest or come dividend price. This would be at come interest or come dividend price. And therefore I have sold, students, I have sold the shares. Now I have sold it at 108. Now please understand, for share it is 3 months. For shares it is 3 months, and for the unit it is 9 months, students. For unit it is 9 months. So in this situation, for share it is 3 months, for unit it is 9 months. Now whatever happens now, what happens, students, in this case? If I have sold the shares within 3 months, or I have sold the unit within 9 months, then short-term capital gains will be computed. Full value of consideration is the selling price. But please understand, now this is traded as X dividend. This period it will be X dividend price, because dividend is already declared after the record date, on the record date, and this is at come dividend price. So the selling price already will go down. So selling price 108, cost of acquisition is 120. Selling price is 108, cost of acquisition is 120. Loss is how much, students? 12. Now in that loss, there is a element of dividend. In that loss, students, there is an element of dividend in this case. So what happens in this case, students? The dividend will be stripped. Now please understand, the dividend will be stripped. So the dividend portion will be stripped, and finally what is the short-term capital loss? The short-term capital loss is 2. So the portion of the dividend in that loss will be stripped. Strip means removed, and the final short-term capital loss would be 2. So this is what this particular question, students, was all about. Now directly, students, what is the situation over here? If you see it very carefully, quickly, let's wrap it up, students, this particular part. So here if you see, X, a resident Indian, is in receipt of income from Ganga REIT, Yamuna REIT and Indus REIT. Now Ganga REIT, now in Ganga REIT, students, A Limited has opted for 115BAA. If A Limited has opted for 115BAA, what does it imply? It implies that in this case, the dividend which will be passed on by A Limited to the Ganga REIT, in the hands of Ganga REIT, it is not taxable. But in the hands of the unit holder, will it be taxable? Yes, it will be taxable. Why? Because they have opted for 115BAA. Yamuna has not opted for 115BAA. So in the hands of Yamuna B Limited, which is the SPV of Yamuna, B Limited has not opted for 115BAA. So when the dividend will be paid by B Limited to Yamuna, it will not be taxable in the hands of Yamuna. When the dividend will be passed on by Yamuna to the unit holder, it will also not be taxable in the hands of the unit holder. Why? Because the SPV has not opted for 115BAA. Coming to the third one, students, Indus REIT, C Limited does not opt for section 115BAA. C Limited has not opted for section 115BAA. In that case also, what you are going to say in this case? So if it has not opted for section 115BAA, students, C Limited, same conclusion, dividend will be exempt in the hands of whom? In the hands of the unit holder. In the hands of the unit holder. Now if it is exempt, now be careful, dividend stripping will apply. It is exempt. If the dividend is exempt, in which case it is exempt? It is exempt in the case of Indus REIT, Yamuna REIT, dividend is exempt. Now if Mr. X, who has purchased the unit, if Mr. X has purchased the unit, students, before the record date, what is the record date? Record date is 1st June. So when he has purchased on 1st April. Is it within 3 months from the record date? Yes, it is within 3 months from the record date. What about this one? Is it within 3 months from the record date? No, it is not within 3 months of the record date. What about this one, students? 1st April? Yes, it is within 3 months from the record date. Now, when they have transferred, now dividend component, students, 40,000, 35,000, 42,000. Anyway, students, dividend here it is taxable. Ganga REIT, dividend is taxable already. Dividend stripping concept is applicable when the dividend is exempt. Dividend stripping concept is applicable when the dividend is exempt. In which case the dividend is exempt? In the case of Yamuna and Indus REIT, the dividend received by the unit holder, it is exempt. So that time the dividend stripping would be applicable. And as far as Ganga REIT is concerned, the dividend in the hands of the unit holder, it is not exempt, it is taxable. So when the REIT, which is Ganga REIT, will pay the dividend to the unit holder, 10% TDS they will deduct it, because the dividend is taxable. So TDS will be deducted. Yes, TDS will be deducted. When the dividend will be paid by Ganga to the unit holder, 10% TDS will be deducted. Let's come to this one, students. Now, in this case, tell me whether the dividend stripping, is it applicable? In this case, dividend stripping, is it applicable? Unfortunately, the answer is no. Dividend stripping is not applicable. And what is the reason why dividend stripping is not applicable? Because it is purchased beyond 3 months before the record dates. It is purchased beyond 3 months from the record date. Therefore, dividend stripping is not applicable. Is that point clear to all of you, friends? So, if dividend stripping is not applicable, what does it imply? In this case, dividend stripping is not applicable. That is what we will say. And only in the last case the dividend stripping is applicable, 94.7. So now, students, based on that, point number D, Ganga REIT is required to deduct TDS at 10%, whereas Yamuna REIT and Indus REIT are not required to TDS. Why it is not required to TDS? Because SPV has not opted for 115BAA, and therefore it is exempt in the hands of the unit holder. And because it is exempt in the hands of the unit holder, therefore no TDS will be required to be deducted in that case. Dividend stripping provision under 194.7 is applicable only in the last case, which is Indus REIT. Only in the last case. Why? Because the shares was purchased within 3 months before the record date. And hence dividend stripping is applicable only in the last case. So this is point number D. Just remember this only for tomorrow, and that should be all. Now, students, what you are going to do immediately now, I have given you the list of the sections. 194I, 194IA, those sections, LC and all, 194B, 194BB, 194N. This 5 sections, students, immediately you do it, and your TDS and TCS is over. Now you tell me, students, one thing. After this primary, you want me to assessment, in any case I'm going to do it primary. Now you tell me, students, whether you want me to do appeals or you want me to do that limited section of PGVP. Which is that one? You only have to say, students. I cannot do both, because that is one thing which you need to tell me. Which is the segment that you want to do? Assessment, any case I'll be doing it, students, over here. But beyond appeal and PGVP, which one of the two you want me to do it? Quickly, students. We will be meeting, students, now for this segment, students, at 4 p.m. PGVP, fair enough. So, students, what I will do now, what you do is that you finish it off this, and also, students, in the capital gains, primarily, if you are now revising, students, capital gains, fair enough, I'll do the PGVP part, PGVP and ICDS club together. So, assessment, what I'm going to do in assessment, updated return, search, survey, and yes, Kamal, don't worry. Updated return, search, survey, and after that, 147. That particular part. This is what I'm going to do in assessment. And capital gain, students, what you do now, people? Students, you directly, in this case, hit upon amalgamation, demerger. Remember this section, this 45.5. Compulsory acquisition, 50C, and finally 54EC, 54EE, 54 EC, 54 EE. And 54 last. This much, students, you will have amalgamation, demerger and conversion of private company into this one. This is what primarily you will get into it, students, immediately. Is that not clear to all of you? CG is, this is what you are going to deal with it. So my suggestion, students, would be finish off this, do the CG part, and thereafter, students, in the set off topic 72A, 78 and 79, 3 sections. Piyush, there is no capital gains video link. So set off, students, would be 72A, 78 and 79, 3 sections, that's it. Fine. And I must tell to all of you, amalgamation, demerger, you only refer the practical, students, which has been there. Huh? There are some practical questions. Remember that exemption, there is only about exemption. Okay, so you do this one, and I will now hit you directly. Assessment now, students, there will only be one video. Assessment, which should be there, and PGUP combined together. I'm going to wrap it up this together. 4 p.m. we are going to meet it. This will go till, in fact, if I have to time it across, 6:30 p.m. or 7. You'll say, sir, what about the theory part of the non-resident taxation? Don't worry, this is a half an hour theory. Even though you do it last, even though you end up doing early in the morning, even that is fine, half an hour. Quickly, you can just refer that particular theory part. That is not a big deal. But the now what you do, students, is that CG part and the section of TDS, CG part, and set off 72A, 78 and 79. If you can finish it off, this will be good for all of you. And I think that should be all. I'll see you then at 4 p.m. quickly on those particular parts, students. Take care.